So we're looking at CMHC's latest report on Canada's housing supply shortage and specifically how it applies to Toronto. Now, this report is telling us something that feels a little bit different from what we're seeing these days. Even though the market right now in Toronto is a buyer's market with lots of listings and slow sales, CMHC says Toronto is actually in a deep supply shortage crisis. So what's going on? Well, let's break this all down on what it means and why it's happening. First, housing prices. From 2004 to 2019, Toronto's home prices were growing crazy fast, like 7.6% every year, way above Canada's average growth rate. And after 2019, prices slowed down a bit to 6.7% per year, and that's primarily because mortgage rates jumped in 2022 and affordability got tougher. But here's the thing, 6.7% is still a steep climb every single year, and prices are way ahead of income growth. So yeah, homes are extremely expensive in Toronto. Now let's talk rents. Between 2004 and 2019, rents in Toronto went up by around 2.7% each year, and that is steady and more or less in line with inflation. But then after 2019, that's when rents jumped up a lot more, 4.8% annually in Toronto, almost double before. Why? Well, when houses got a lot less affordable, more people had to rent. And then when interest rates spiked, buying got even tougher, pushing more people into renting. And I would say that this huge rent increase isn't actually just in Toronto. If you look at this chart clearly, it actually went up a lot faster in other parts of the country because other cities were relatively more affordable still, so people ended up leaving Toronto to the other parts of Canada. But ultimately, what this means is that we're not just in a buying supply crunch, but it's also very real in the rental market too, and the rental supply wasn't ready for the rental demand. Next up, let's talk about Toronto's affordability nightmare. The CMHC report uses something called the home buying affordability ratio, but that's just a fancy way of comparing what it costs to own a home to what people actually earn. The higher, the less affordable. In 2019, this ratio was already very bad, 59%. But by 2024, this shot up to 74%. And that means the average household in Toronto now needs to spend nearly 3/4 of their income just to own a home. That's not just high, it's completely unsustainable. Ideally, this rate should be under 30% to be considered affordable, but Toronto is just so far past that CMHC has basically given up on that goal, and affordability for Toronto is now just aiming to get us back to the 2019 levels. And that is a stretch right now because the biggest problem is that demand just keeps growing, which brings us to population growth. Toronto's population, like the rest of Canada, is still climbing. CMHC expects Canada to hit nearly 44.5 million people by 2035, and the biggest chunk of that growth will land right here in Toronto. Why? Well, Toronto has one of the strongest economies in the country, so people move here for opportunity. Yes, we have seen big swings in immigration. Massive waves came between 2021 and 2024, and now things have really quieted down in 2025. But with that said, population growth isn't going to be stopping for that long. Between natural growth and future immigration picking back up, demand for housing will keep climbing in the long term. Which leads CMHC to the real issue. Supply just isn't keeping up. CMHC says Toronto needs to build 32,000 more homes every year on top of what we're already adding each year just to get back to the 2019 affordability levels. CMHC says that if we don't change anything today, if we keep building at the same slow pace we've been doing, Toronto is projected to see the fastest house price growth in Canada over the next decade. We're talking about a 63% price increase between 2024 and 2035, which works out to roughly 5% price growth per year. And that is at least double inflation in wage growth, totally unsustainable for affordability. Only if we build an extra 32,000 more homes a year will this rate cool down. We're not talking prices coming down. It will still go up every year, probably more in line with inflation though, at around 2% a year, so that we land at around 20% higher in price over the next decade. And this is what they call affordable. Now, you might be wondering, if there is such a big supply shortage, why are the news headlines always talking about too much housing supply right now here in Toronto? Great question. The resale market is flooded with listings these days, especially in Toronto condos. Sales are slow, prices are soft, and it feels like there is an oversupply. But we do have the wrong kind of housing here. Most of what's sitting on the market are smaller condos and investor units, not the family-sized homes that people actually want to live in. So yes, right now, renters are jumping on deals with lower rents in smaller condos and sitting on the sidelines hoping to buy someday. Some others, like families who can't rent small condos, are staying put where they are with lower rents that they already have. The reality is that a lot of renters still cannot afford to buy. And for those who can, some of them are still not convinced it's the right time to buy. With the market soft, news full of doom and gloom, and most are hoping prices will fall further. On the flip side, sellers aren't willing to cut their prices much, and high construction costs do help to keep a floor on this resale housing market. But here's what you need to know. Once more buyers start feeling confident again, demand will come back. And since builders are holding off on building more new homes these days, and even if they do, they're not building the right kind of housing, this mismatch will eventually send home prices up again. So to sum this all up, CMHC's report does show that we do have a serious long-term supply shortage in Toronto, even if it doesn't feel like it right now. Prices aren't falling off a cliff anymore, and if anything, they have stabilized for a few years now, and with construction slowing and demand still building under the surface, we're likely going to see more upward pressure again down the line. And in the meantime, some of today's best multiplex deals are cash flowing really well these days. We're seeing turnkey multiplexes at around $1 million, generating over $2,000 a month in positive cash flow based on a 20% down payment. And that's something that we could not say a year or two ago. And if you are curious about what kind of returns are possible with Toronto multiplexes, check out this video right here or just reach out to us. We're happy to show you the best deals we're seeing right now. We're a real estate sales brokerage that specializes in Toronto multiplex investing. Whether you're looking for a turnkey property or something with more value add potential, we're here to help you find strong deals, run the numbers, and support you all the way from analysis, building, renovations, through to getting it rented out. If you are ready to explore what's possible, feel free to book a free strategy call with us using this link here. Let's figure out the right move for you together.